So Fastly stock absolutely tanked today. It went down over 27% in a single day. So in this video, we're going to talk about why it happened and some of the things you could think about, whether you want to buy Fastly or sell your existing shares or just stay on the sidelines. We're going to address all of that in this video. So the main reason Fastly went down as much as it did is that it lowered its revenue guidance. So instead of 73.5 to 75 million, Fastly said, no, we're only going to do anywhere from 70 to 71 million. So based on those ranges, the worst case scenario is that Fastly underperforms like 6% of what they previously said in their earlier guidelines. They also withdrew their Q4 guidance. So that's also another area of concern. But why would a stock, after only saying, worst case scenario, our earnings, our revenue is 6% lower than what we told you earlier, actually goes down over 27%? The answer is valuation. So a few days ago, Fastly was trading at 50 times its revenue. And just to give you guys an idea of how crazy that is, Amazon currently trades at a little over 5 times its revenue. So we're looking at a stock that at its peak was almost 10 times more expensive than Amazon if you look at it from a price to sales standpoint. So when any type of crack appears in a growth story, a stock gets hit very hard, because with a growth stock, the fundamentals, like you want to see growth, but you do get to ridiculously high levels of valuation, such as a little over 50 times its revenue just a few days ago. So Fastly dropped in large part because of that overvaluation, but Fastly is still a relatively overvalued company if you look at some of the other options. Now, you do want to, it's also important to think about how Fastly has performed in the past. And this is a stock that there could be like very little news catalysts and it will go up like 5% just because. So for instance, one of the recent developments was back when the stimulus had a lot more potential to happen, and there were very positive signs. And just on that, Fastly went up by almost 20%. So the fact that it went up from $100 to pretty much $120 in just a single day from no like company specific news, mainly the stimulus, and now there's a lot of doubts as to what's going to happen next. The stock was already bound for a pullback, and then you have the combined element of the company coming out and saying that our revenue might be a little off from what we previously said. Now, Fastly stock did go down the day before as well, hinting at this idea of the company's overvalued. And a main catalyst for the stock market, which was the prospects of a stimulus, now in murky waters, which the high jumps just from the possibility of the hopes. It's a little overdue just based on the current situation. Also, not to mention, Fastly has a TikTok as 12% of their revenue. And while in the long term, Fastly has a good business model, you have the scenario of they could lose a big chunk of their revenue in the short term, and they are overvalued. This is why you hear people say, great company, bad stock, because the company may be great, but it may be severely overvalued because everyone really gets in on the secret that this is a great company. So where does that leave us as investors? What exactly do we do with Fastly? Whether we have the shares or thinking about buying, we are just staying on the sidelines, what exactly should we do? Now, each investor is going to have a different opinion, but this is going to be like the way I'm currently playing it. So I got I did some research. In part, it's a combination of research and luck. So pretty much I bought a protective put the day before the big mess went down. So it did shield me from a lot of the losses that I would have faced if I didn't have that put in place. But what I'm doing with my shares is I'm doing covered calls. I'm actually buying puts also. something that I'm getting a little more into buying options. Again, this is more of a protective play. This isn't where you throw all of your money at options and hope you get really lucky, but it's a mix of covered calls and buying puts because I do not want to panic sell because I have, and I feel like everyone can relate to this. You see something go, unless you have index funds, but you see something go down a lot, you panic, you sell it, and then it shoots back up. And this happened with Fastly just a few weeks ago. Not with me, but the stock went down really low to like the low 80s, maybe even a little under 80. And then it shot up to the 130 range. And now we're back down just in the $90, $89 range. And who knows what tomorrow is going to bring because it's still overvalued. Like it's not like the valuation suddenly makes it affordable. It's still trading at a ridiculous price to sales, but it is a company that also has a bright future. So while I don't see myself selling any shares, and I think if you're holding onto them, you shouldn't sell either, I am doing some covered call and buying push just as a way to hedge and protect myself from downside. If you don't have any position in Fastly, you may just want to stay on the sidelines a little bit, pay attention to what's going on. And if you really don't want to wait on the sidelines and you want to get in, I suggest Limelight Networks instead of Fastly. It's a smaller company in terms of market cap. It trades at a far more reasonable, a little bit over 3 times its revenue. It's one of those under the radar stocks that pretty much does very similar stuff to Fastly, and you don't have the insanely high valuation that Fastly has, which indicates a lot more risk. Like just because Fastly went down as much as it did doesn't necessarily mean it's an undervalued play at all. There's still a lot of overvalue to it. So if you really want to get into this space, I would stay on the sidelines for Fastly, get into something like Limelight Networks instead. That ticker is LLNW, in case you haven't heard of the company before. But anyways, I'd really love to hear your thoughts. Do you think Fastly is going to rebound right away? Do you think there's more pain in the short term and then a long-term success story? Or do you think this thing is just going to keep on tanking? I'd love to hear from you guys. Hopefully you smash the like button and subscribe if you did enjoy this video. I hope to see you guys next time.